In the last video, I covered the 7 worst UK property investment areas in 2025. And if you haven't seen that, I'll put a link in the description box below because it's worth watching. And so in this one, let me share the 7 best UK property investment areas in my opinion. And I know at least 2 of them are going to surprise you. Hi, my name's Tony Law from Your First 4 Houses, and I've spent this week looking into market data, regeneration plans, infrastructure projects, and rental demand across basically the whole of the UK. And I've managed to identify what I think are 7 outstanding property investment areas. And I'm not just talking about house prices or yields here. I've dug much, much deeper, and I wanted to give you specifically some suggestions on which strategies might work best in each of these 7 areas. However, just to be absolutely clear here, these are just my personal views. None of this is financial advice. You obviously need to do your own personal research. Okay, my first one is actually a little bit of a cheat because in 7th place, it's Hertfordshire, which is, of course, a county rather than a town, but it's on my list for a very specific strategy, as you'll see in a moment. So this is an expensive area with average house prices at around about 500,000. And I know from personal experience, because in the past we've had properties here, that this is a fantastic place to add massive value to properties in this specific area. And I've done that. It works fantastically well. So just to be clear, by adding massive value, I'm primarily talking about planning gains in some form. So, for example, you might take a property and split off a plot and then get planning permission to build a house or 2 on that plot. I've done that. In fact, I've done it on one occasion where I simply got the planning permission and added about £100,000 worth of value. I never put a spade in the ground. Or maybe taking an older, larger property and converting that into maybe 2 houses or flats, which again, I've done. So basically, this isn't an area that I'm going to be recommending from a rental income point of view, although obviously you can rent properties here. It's an area where you can make fantastic lumps of capital by adding massive value to a property. I should add, though, that there's absolutely no real demand for HMOs in Hertfordshire. That's a strategy that I don't think works in this area, but there is a little bit of potential for serviced accommodation. In 6th position, I've got Brighton, and again, for a very specific and somewhat unusual strategy, but I'll come on to that in a second. So Brighton is one of the UK's most popular seaside destinations, of course, as I'm sure you know, with over 11 million visitors a year and more than 1.2 billion pumped into the local economy by simply tourism alone. Needless to say, service accommodation or holiday lets are great here. That's probably the main driver for this area, especially since it's a really easy drive from London. There's 2 universities, a booming creative and digital sector, and London commuters all help to keep that tenant demand really strong. Specifically, areas like Lewis Road and Kemp Town are popular for HMOs, especially student HMOs, where room rents are actually really quite high and voids are really quite low. And while Article 4 does apply in many parts of Brighton, HMOs do come onto the market from time to time. In fact, I've just checked, and on Rightmove, right at the moment, at the time of filming, there's currently 6 available to buy, one of which has been on the market for quite some time. So if you live in that area, why wouldn't you go and see it? Alternatively, you could offer to buy a non-HMO property at a slightly increased rate, couldn't you? If the current owner is willing to allow you to buy it subject to planning permission to convert it into an HMO. Now, you may think that no one would ever agree to that, but I've done it before and it worked for me. And so if you're maybe willing to offer that person, say, £10,000 more, if they're willing to hang on a little bit while you go for planning permission, some people will say yes to that. On the regeneration front, Brighton's finally making progress on long overdue projects and the transport infrastructure is improving too, with big upgrades planned for the Brighton main line. So what about that weird strategy that I was mentioning? Well, it's basically this. Let me show you on Rightmove. So you're going to search for Brighton, naturally, and you're going to look for property types being flats. You want number of bedrooms, minimum 1, and maximum also 1. And we're going to search for those flats. We then want to just bung in a couple of filters quickly. You don't want to see new homes, you don't want retirement, and you don't want buying schemes. But you can basically leave the rest of this as it is. Um, for the more astute people, normally I would say you would tick the show subject. What is it? I would normally suggest you tick the include under offer sold subject to contract box as well. But in this particular case, it shows way too many. So let me just show you this like this. So we're now going to have a whole long list of 1-bedroom places, or specifically flats in this area. Organize them in terms of lowest price first. And you've now got 360 1-bedroom flats. Let's just jump forward a little bit. And I haven't looked at any of these, but your job now is to basically go down this list one at a time, looking for each of the individual flats' floor plans. And specifically, you're looking for those 1-bedroom flats that have a really large social area where you can potentially put a kind of open plan kitchen. So the perfect scenario is you've got the kitchen on one side, and you can take it through and put it into the lounge area. You then turn that kitchen into a second bedroom. Now, the process of doing this, it's actually very easy to do. Trust me, I was a kitchen fitter for 22 years. Oh, by the way, I owned a kitchen firm for 22 years. Part of that was fitting. It's very easy to do, and it can add massive value. And there's lots and lots of opportunities or properties like this in Brighton that you can check out. One little tip, look for the older properties, because usually they're a little bit bigger. So in position number 5, we have Birmingham, where there's over 1 billion being invested through projects like the Big City Plan. Plus, of course, the eventual arrival of HS2, which is going to cut travel time from Birmingham to London all the way down to 49 minutes. Thousands of new jobs are being created, which will only push up rental demand, and yields are still strong in the suburbs where property prices are a little bit more affordable. Now, with that said, there is currently a bit of an oversupply of HMO rooms across the whole of Birmingham. If you look at the whole of Birmingham, you're going to see there's a bit of an oversupply. But, and here's the thing, in some areas of Birmingham, there's a really strong demand for HMO rooms. You've just got to do your research properly. And maybe as a little bit of a quiet tip here, don't tell anybody else this, maybe have a little bit of a look at Solihull. Now, if you're thinking long-term, buy-to-lets in the suburb where you can find rundown places to add massive value and pull your cash out quickly by refinancing is personally where I would be focusing. But targeted HMOs in those higher demand pockets can also work out really, really well in Birmingham. And if you're into service accommodation, then frankly, there's plenty of opportunity, especially from business travellers and event visitors. And so, in short, Birmingham ticks a lot of the boxes for me, both in terms of capital growth and rental income. You just need to choose your strategy and your location carefully. And in 4th position, we've got Newcastle. Newcastle is one of those cities that I think kind of sneaks under the radar a little bit with investors, to be honest with you. The city's economy is shifting fast, moving away from its industrial past, naturally, and steadily becoming a growing hub for tech, science, and education. The new Newcastle Helix Tech Park and the Fourth Yards regeneration areas are bringing in really loads of new business and therefore new jobs. And with a population growing faster than the UK average, housing demand is only heading in one direction. Now, to give you an idea of just how hot the rental market is, the number of available rental properties has dropped by 64% in the past year alone, making Newcastle the tightest rental market of any major UK city. This shortage means strong competition for tenants, low voids, and excellent yields of up to 6 or even 8% in certain postcodes. In terms of strategy, personally, I think high-yield buy-to-lets and HMOs both work really, really well here. Student demand is rock solid thanks to the city's 2 big universities, and young professionals are flocking to areas like Jesmond, Heaton and Sandyford. You've just got to work out, or rather watch out for the Article 4 areas if you're looking at HMOs in the city centre. But if you invest maybe just a little bit outside of the Article 4 areas, and I've just had a little look at the Article 4 plan, hint, hint, you're going to find that there's going to be fewer restrictions and still plenty of demand. And if flipping, by the way, is more your kind of thing, there are definitely areas around the city where older terraces can be bought relatively cheaply, renovated, and flipped on for a healthy profit. So, Newcastle's affordable, in my opinion. It's growing and it's got one of the strongest rental markets in the UK right now. So I think it's definitely one of the places it should be on your watch list. Believe it or not, I put Grimsby at number 3. Now, I know what you're thinking. Grimsby? Really? But hear me out on this one, because Grimsby is actually undergoing a really serious transformation at the moment. Over 100 million has already been invested in regeneration. Plus, Grimsby is now recognised as a world leader for offshore wind energy, with global firms like Ørsted creating hundreds of skilled jobs locally in the area. Now, this is driving local rental demand, understandably, and house prices jumped 13.5% over the past year. Yet the average price for properties is still only around about £160,000. So for many people, that's very affordable still. So what's the best strategy here? Well, for me, it's simple. It's 100% BRRR. I think that's the best way to move forwards here. Buy cheap properties, refurbish them well, refinance, and pull your money back out again quickly so you can use those funds in the next deal. And I've done that lots and lots of times. There are loads of older terraces crying out for refurbishment. And with prices still low, the numbers can stack up quite nicely. Just to be clear though, there's virtually no HMO demand in Grimsby, so forget about that strategy, just stick to BRRR. So if you're looking for affordable entry, good rental demand for workers, and solid potential for capital uplift over the long term as regeneration continues, Grimsby is well worth a closer look, despite what you might initially have thought. At number 2, it's the favourite of many of my previous students, and that's Liverpool. Now, if you're looking for strong rental yields and low entry prices, I think Liverpool's hard to ignore. There's huge regeneration happening in the city, from the £5 billion Liverpool Waters project to the new Everton Stadium and Bramley Moor Dock, plus continued investment around Lime Street, the Knowledge Quarter, and the city's iconic waterfront. And that really is a lovely area. I was up there only 2 weeks ago on the bike. Despite all this progress, however, average house prices are still around £76,000, making Liverpool one of the most affordable major cities in the UK. So what's the best strategy here? Well, historically, it was HMOs for students and young professionals, and that's kind of been the go-to, with yields in excess of 10% in areas like Kensington, Edge Hill and Wavertree. But, and this is actually really important, there's now a bit of an oversupply of HMO rooms in parts of the city. And so some landlords are actually now seeing longer voids and more tenant turnover. So if you're going to go down the HMO route, there's still plenty of demand in certain areas. You just need to choose your area very carefully and make sure that your property really stands out from the crowd. Alternatively, there's my old favourite, BRRR, which I think works really, really well here. Buying an older terrace property, doing a good refurb but keeping your costs really tight, and then refinancing to pull your capital back out is a model many investors are using successfully in Liverpool right now, especially in areas like Old Swan or Norris. And for more experienced investors, maybe look at service accommodation near the city centre, which I think is still a great option, giving good returns, thanks to Liverpool's tourism, football fans and conference visitors. But do check local short-let regulations, as these are currently tightening. And so in short, Liverpool offers cash flow, growth potential and affordability. But you're going to need to do your research, especially if you're considering HMOs. And lastly, in first place on my list is Manchester. Now, if there's one city outside of London that investors should have on their radar, I actually think it's Manchester. Manchester's seen big property price rises over the past few years, and demand is showing no signs of slowing down. The city's become a major business hub with huge employers in finance, tech, media and science, plus over 100,000 students adding to that rental demand. Rents have jumped around 12% in the past year alone, and typical yields tend to be nudging in the 8% kind of region, and I think that's perfectly achievable, even in central areas. So what's the best strategy here? Well, for me, It's either high quality buy-to-let apartments aimed at younger professionals near the city centre, or good quality smaller houses where, again, you can add some real value and pull most of the investment back out. If you're open to something a little bit more active, student HMOs in areas like Fallowfield or Rusholme can work really, really well too, because there's just great demand there. Just watch out for Article 4 restrictions. So the bottom line, I think Manchester offers great rental demand, yield and long-term growth, all in one place, and many of my students have invested there. And so, if you're now fired up and ready to check out some of these areas, there's one thing you absolutely need. And that's my detailed 50-point checklist to make sure that when you do that next investment property, you haven't missed anything out. And so if you'd like to grab your copy completely for free, click the link here and I'll be delighted to send it straight out to you. Thanks so much for watching. I'm sorry this is a bit of a longer one, but I really hope that you found it helpful, and I look forward to seeing you in the next video.